Yo, good morning, everybody. Yeah, if y'all could let me know if you see everything okay, hear everything okay. Just want to make sure before we get started. Having a little bit of tech issues this morning, so I'm a little bit late. Yeah, hopefully you guys have had a good week so far. There's only a 3-second lag on these calls, so hopefully it stays that way. But yeah, let me know if you guys could see the screen okay, all the writing and whatnot. Just want to make sure. Just let me know in the chat. Looks good? Okay, good. All right, so let's get down to business. Let's go look at what we got going on. We have news at 6:45. It's PMI, so it should be pretty impactful. We've seen a pretty sharp decline here. Went up, right? Did what Power 3 generally does, right? Start of the week, goes against what its overall intention is. We set the high and then we just tanked, right? From the rejection block, left equal highs. So we did leave liquidity markers up here for later on. But at this moment, we have the inversion fair value gap. Okay, we did talk about how it's going to have to stay above that in order for us to try to be bullish. So at this moment, it looks like we are not respecting this wick, this breaker, or this inversion fair value gap, or this swing low. We do have, wait, let me see. Do we have SMT there? Let me see. No, we don't really have any SMT either. So they're all doing this. And the dollar is just accelerating. That is coupled with the yields having a reluctance to want to really get lower. Right? They're kind of stuck. There's a lot of things on the back end happening with the US economy and blockchain. So we got to be very, very cautious. It is the summer months as well. But there's a lot of stuff happening with blockchain and the financial rails to the US or just global economy. But in particular, the US, there has been a lot of movement and there's a lot of conversations around the Clarity Act right now. So, you know, it's a heavily impactful decision that they're going to make when it comes to crypto, because it's directly looking to tokenize the stock market. Another thing that I figured out on June 28th this month, the stock market is now going to go 24/5. So it's going to trade 24 hours, 5 days a week, minus the weekends. So we're going to have to pay attention to what that does to our new day opening gap. ICT has talked about this in the past, where if they were to change it and allow for more trading, basically everyday trading, like all day with no pauses, we may not be able to see the gap on the new day opening gap anymore, but those levels have to be referred to. Okay, so that hour of price delivery, that from start to finish, we're still going to have to note it. Okay, so that's something that I heard is finalized and happening. And they're going to tokenize assets, I believe, in July, or they're going to start tokenizing. So I believe it's in July. I'll have to double check. But that's going to be interesting. That means blockchain technology, specifically companies like XRP, XLM, are already going to have their hands in the technology that's tokenizing the stock market. And it's going to be the start of tokenized real world assets. So these are big things, huge changes that are taking place on the back end of the markets and just assets as a whole. So if you haven't been paying attention to XRP and XLM, you damn well should, because that's huge. That's exactly what they were created to do. So they're finally being adopted in that way. Obviously, it's not something that's going to open the floodgates right away because it's a slow implementation, but they're already going to start. So exactly what we all have assumed, those of us that invest in XRP and XLM, exactly what we've assumed was going to be the outcome with these assets, these technologies, it's manifesting. We were like 8 years ahead of the curve. Okay. So, and things are just going to pick up even more if we get this Clarity Act passed. So that's going to bring changes to the stock market. Does it mean the algorithm's going to change? No. Right? Like ICT said, the better the technology becomes, because the markets operate the way that they operate from a liquidity and inefficiency standpoint, it's not going to change. There still has to be a buyer and seller. There's still psychology of a human being, right? That doesn't change just because new technology comes. It's going to get cleaner, more precise, not worse, or, it's not like they're going to change the algorithm. Okay. That's not the kind of change we're talking about. We're talking about more efficiency. That's what a lot of crypto technologies were created to do, was create better efficiency in whatever area they're trying to populate. Okay. So that is some stuff that you want to pay attention to. Nobody's going to be talking about this, right? Because nobody's paying attention. And people are looking at the XRP chart being at $1.10, and they think, oh, well, that company's probably dead. When in reality, Ripple, the company, is in the top 15 in the world in terms of valuation. They have 75 partnerships with banks, or 75 licenses, and they have over 1,400 partnerships with banks around the world, let alone in America. And it keeps growing every single day. So if that tech was not useful and it wasn't going to be implemented, this wouldn't be happening. But it's actually happening, right? So I'm curious to see what that's going to do to the market. That's a huge change. So I wouldn't be surprised if it shakes up the market, if it makes it do some wild stuff. Okay. So you want to make sure you are keeping that in mind. But again, it doesn't change anything that we're doing. So we wanted this to drop a little bit, the DXY, and then give us this run higher. We were already bullish. We were already aiming for this potentially. You could see that we were correct on that draw as well from Sunday. Let me get this on the other chart too. Okay. So we were already correct on what the direction would have been. I just wanted to see it drop lower. Can any of you guys that have been with me for a while explain why this makes sense that it didn't drop lower and go deep into this range? Can you let me know in the chat? Let's see who's been paying attention. Right? Why would this have not wanted to drop? Right? I wanted to see if it could drop. But because it didn't drop, what is in the chart right here that we talk about all the time that has refused to allow this to go lower, right? Before it ended up going higher. Let me know in the chat. If you don't know, just say, I don't know. But I'm going to wait for your response. Can't just give you all the answers every time, right? You're not going to learn. Okay, what's that? Okay. Yeah, let me know in the chat. If you get it wrong, don't worry about it. But I want to see where you guys are at. So just let me know. There's 4 of you up on right now, so let me know. One of you 4 should probably have the answer. Let's see. Okay, well, I'll let y'all think about that. I'm not going to give y'all the answer. but I talk about it all the time. I mentioned that it could be the case, but I'm gonna wait for y'all to give me the answer on that. So yeah, let's keep looking around and we'll come back to it. So again, we have this holding in here for the bond, is it the yields? Wait, no. ZB is the bonds. Okay. So the bonds are holding above the suspension block, which is interesting because if it's going to be a reliable sell-off, we need this to decline. When it comes to the indices dropping, obviously it's going against what the bonds are showing. So it's kind of interesting. They're kind of just not doing anything. Okay. They're kind of stuck. So we're going to have to wait and see what it's really wanting to do. There's a lot of conversations about interest rates. They're talking about hiking interest rates, talking about not hiking interest rates, talking about cutting it. But they can't get to cutting when inflation's too high. So they're going to have to probably increase rates. That is going to drop this. Just the conversation of dropping rates or increasing rates. Sorry about that. Just the conversation, the rumblings of them saying we're going to increase rates has made this not able to give us any real meaningful rally. It's given some, right? We've narrated this whole entire market the whole entire year up to this point, and it held here and ran up. We saw a slight impulse higher with that behavior, but overall prices basically broke down below these levels we wouldn't have wanted to see get violated if we were going to be bullish. So if you think we have 1, 2, right, being the low, a low, inversion fair value gap, we now have a mitigation block with this candle here. So that's more relevant than the inversion a little bit at this point. Has to get through that first before it comes back. So we have 3 PD arrays violated. We have new week opening gaps violated, multiple. We have this fair value gap that's been inverted. So, you know, this breaker is now being really contested. So it looks like we are going to continue to go lower. And dollar being so aggressive just further supports that that fact. So I am interested in continuing to see how this is going to hold. Right, that's a previous day's low / mitigation block. Why is it a mitigation block? Well, because we have a high, low, failure swing. Let me double check this. The high is 96775. Oh, I guess it did take that. So it pierced that high a little bit. So that makes this a breaker, not a mitigation block. Or you could just look at it as a large wick, right? It traded through the large wick, coming back into that large wick. We shouldn't see it even get beyond that. So we have buy side, sell side, right? We have sell side, buy side here. So all of that is balanced as we pushed away from it. So any return into that, we should see this range in here, if it's going to be bearish, get treated as a BPR. Okay. So we'll see what it wants to do with that. I wouldn't be surprised given how fast London is. Yet again, we have a very fast London. Looks like we're committed to trying to target potentially this, but it's a little far away, but I will keep my eyes on that. I encourage you guys to do so as well. We may look to try to take that out because not only is it a low, right, and we've broken 3 PD arrays, but we're also having a failure swing down here. Okay. Good morning, Sean. Good morning, Tony. Right. So any return back into this, we don't want to see it go deeply into this. If it gets back above midpoint from this low to that high, then again, that may be something that can be impactful. We have regular trading hours highs from June 5th that also respected. We had rejection blocks up here that we outlined that held up in price. This previous week's high, we talked about this the other day, but this previous week's high has been slightly swept. And then that response has been very aggressive. So you also have a breaker here. So shift in market structure here. And then we got a true shift right there, right? With displacement, with the failure to break above these equal highs, very small stop run, rapidly bullish dollar, okay? Bonds and yields are kind of stuck because of the conversations about what's happening with them, or what's going to happen with them. And we also have the tokenized portion of the assets coming this month in literally 5 days. So the first assets, or the first initiation to tokenize the stock market, is taking place, which is crazy to even think about, right? I thought crypto was a scam, right? I thought the technology was, I thought it's going to zero. What happened? But yeah, so we'll see what happens. We got S&T on both the highs and the lows, right? So 30, 10, 5 year. We're just stuck in a range. So that may be an issue for the other assets. I called for GBP or Euro and GBP to decline. We talked about how it should hold this and then look to target this low. The analysis for this asset has also worked out perfectly. And I mean, we've called for this to be a sell model for literally weeks, and it finally got there, right? So we were correct for weeks at a time. 1, 2, 3, 4. Wait, 1, 2, 3, 4 straight weeks we've been correct. Aside from the rest of the year, right? We've been correct pretty much every single week. And the handful of times we're not correct, we adjust, and then we get in line at least by Wednesday. But yeah, so again, coming back to this chart here, did you guys come up with the explanation? Why did this not need to come down into here, right? What made this not really required to go down into that? I wanted to see if it could get down there right at the start of the week on Sunday. But because it didn't get down there, what could be the explanation, right? What is in this area that we talk about all the time that has now refused to push it lower, right? And kind of supports this going higher aggressively now, right? Let me know in the chat. And if you don't know, just put a 1 in the chat. It's very important stuff. I want to make sure you guys know. So, and if I just give you the answers and never like test you out a little bit, what is this? Like, what are you trying to do? You just want the answers, and you're not going to get profitable by just demanding answers and not trying to figure it out. Okay, so what in this area, right? What about this lower price delivery, when price got above it, pretty much refused to allow this idea to give us that drop lower before it went higher? It just started going higher from here. Why could that be? Right? Based on what you guys have learned from me, let me know in the chat. Yo, good morning, DJ. Again, let me know. I'm not giving you the answer. I'm not going to give you the answer. Okay, Sean said a breaker. Okay. I guess you could somewhat look at that. I'm looking for something in particular. That's a good thing to point out, though. From this high to that low, price getting above, I guess you could look at that as a potential. Let me see. High, low, high. Yeah, I guess that fits too. No, it doesn't have anything to do with deferred liquidity. It's more simplistic than that, right? Because this was a market maker buy model. So what happens when we complete a market maker buy model? What does that range now become? This right here had something to do with deferred liquidity right here. Went up into high resistance, set a low, took that low, and then rapidly gave us a buy model to target the high. But the reason for this to not need to go down into here, and this makes sense why it didn't, it's simplistic, right? Because if you think of a buy model when it gets completed, we've talked about what that turns, or what it should turn into once it leaves that range, right? What the behavior should be. Sometimes it can reach in, especially at the start of the week. It could reach in a little bit just to flirt with it, but it doesn't have to, right? I'm not demanding that it goes into that, because when a buy model is completed or a sell model is completed, it now turns into something, right? That whole range turns into something, right? So what would that be? The breaker idea is nice too, but the breaker is also this as well. What I'm looking to see you guys say, right? A breaker's, you know, this element, an order block. Yeah, exactly, DJ. A BPR. When a market maker model completes, it's now a BPR. It's a variation of balanced price range, because sell side and buy side's delivered. This gap in here, there's a reason they spent a lot of time in there balancing out that piece of price delivery, because they wanted to get in a hurry to target these highs up here, right? And complete that buy model, right? Once a sell side delivery happens and you can outline the sell side of the curve, that whole left side is now going to start being balanced out. As price goes up, you should visualize this, right? After it drops lower like that, and then you can identify that it's a buy model, or if it's bullish, you then start to think, okay, well, every time it pulls against it, right, pulls against that sell-off, this is what's happening, right? The box is going up and up and up, balancing out all the sell side that was just created. So that once it completes that buy model, you now see this as a balanced price range. So it can flirt down in with that a little bit, right? It could drop a little bit, touch it with a wick. I wanted to see if we can get into this wick here, close this in, or at least that little piece right there. Because you notice there's no wick here inside that little piece right there. All this body is coupled with this sell side here. So it doesn't have to go deeply into that. But if it was going to open and drop a little bit, which again, it's power 3 for the week, so it makes sense to expect that. But because it didn't, that shows that we are absolutely aggressively bullish. What could we be aggressively reaching for? Well, we already outlined this fair value gap, right? I said if it gets above this and stays above it, we're going to potentially have this to target next on that monthly chart. Okay, so hopefully that makes sense. Appreciate y'all answering. So yeah, we could see on this daily chart, see that this up candle took place, but it ended up dropping aggressively, closing below, right? So it took this high up here, and then we displaced. So that wick, if this candle on today would have wicked into that and respected it, or couldn't get to the midpoint, and then going into New York session, we saw that it started rapidly pushing lower. That's another way that you could have gauged these lower time frames interest to go lower, right? This was a market maker sell model, low, high, lower low. It's also a bearish breaker. Didn't really offer much into that. Why? Because it's a balanced price range. It doesn't have to go all the way up into it, right? It can. You always want to keep an allowance for it, but your expectation should be if it's going to go lower and the breaker's going to hold, I want to stay in that lower candle, right? Or take the high to the low in that lower 25 to 50%. And if we break the 50% of the breaker, that's invalidation. If it closes above, it could wick above, because the wicks are manipulation, right? But this is preferably what we like to see. And then you got the inversion fair value gap here, or reclaimed, plus the inversion right there, and here, right? So it violated all that. So for anyone trying to be bullish in this, these are your reasons why you have to not force things, right? You got to let price, do what it's going to do, right? You have to be able to track it, and hopefully all this stuff makes sense, because we talk about it all the time, right? 3 PDA rule, very simplistic. So unless this was to aggressively reprice back above these new week opening gaps, invalidate this down candle in here, invalidate well, we could just use a down candle there, right? So unless it gets through that and gets above that breaker candle, right, like closes above it, we're going to keep seeing if this can go lower. And what targets do we have that we can look at? Well, we have this down here. So that 16-hour fair value gap looks kind of nice. If this does look to go lower, again, what could we be setting up in here? Well, isn't this a down candle on the buy side of the curve? If we break down through that, wouldn't this, in that case, potentially end up being accumulation turn distribution? Right? So if we can slide through that with no real effort to go higher, we've now built a narrative that makes sense for it to go lower. Very logical ideas too. Does that mean it can't retrace a little bit? Of course not. Right? You got to be ready for that. But the only way that I'm overall going to be, okay, long-term bullish is still going to hold, I'm going to need an aggressive move back above, breaking through some of these levels that are now being supported as bearish points of interest. Okay. So my objective that looks, pretty sound is this level here. And then if we break through that, right, we may have this low. We have the wicks as well, right? The daily wicks right there. And then that low. And then aside from that, right, if we do get this market maker sell model, which is what it looks like it's ending up doing, then we should be able to target the low resistance liquidity down here. That is the failure swing. Okay. And then beyond that, right, we got levels down there. Got this inefficiency down there on the daily chart. It's on the weekly chart too, right there. All that. Okay. I could just put that like that. Okay. So hopefully all this stuff makes sense. Hopefully I've given you a solid argument for this to continue to drop. Clearly the overnight session, London going into the pre-market open, clearly we're aggressively moving lower. So there is a risk of them trying to come back a little bit. The open price is up here, so it's just been one-sided, non-stop all night. Generally, PM session is going to be better to trade, right, when that's the case. So we're going to observe that. I don't trade the PM session. I can, but I got things to do. But we'll see how it unfolds in this AM session, right? With this being so aggressive, I wouldn't put it past them to try to pull back, find some high that, all these highs have liquidity. People are rushing their stops, winning in shorts overnight. There's been literally no manipulation. So this right here with this fast London, you can see this as delayed protraction, a delayed protraction environment. We haven't had the manipulation. That's basically what's referred to as protraction. There's normal London protraction for the daily profile, and then there's delayed protraction, right? Which means delayed manipulation. So 6:30 coming in, and the fact that we have news at 6:45, with the fast-paced London session, I'm expecting that we're having that delayed protraction because it's already delivered pretty aggressively But my line in the sand, right? If price does come up, my line in the sand is going to be this right here. This is high resistance. Okay. All of this. We have a stop run. It's accumulation on the left side, and it's consolidation. So there's highs up here that have been set. Okay. So I wouldn't be surprised if it tags this, treats this as an area that could offer us deferred liquidity delivery, meaning it's trading into a high resistance level. So it could come back and seek some liquidity from, in this case, the sell-off before they look to go lower. And we have the chance for delayed protraction because we've had no manipulation. It's been rapid overnight. We've had little to no retracements whatsoever. Okay. So these are some things that I have going through my head right now. And yeah, we'll see if we can get that. If we can get that and it runs up, takes these stops, then looks to go as it respects this down delivery here as the bearish breaker, as the previous market maker buy model turned market maker sell model, this is all balanced up here. So again, if we're going to continue to remain bearish, we don't want to see it go all the way up here. It's unlikely to do so because of this logic. So you can rest assured that anything you should be looking at, the same financial advice, obviously, but you can rest assured that if it comes up here, the expectation, at least from my perspective, is we should not anticipate that it's going to go up through this, especially if dollar keeps rapidly going higher. We may see a slight retracement in the dollar. Okay. Just so it can kind of offer this to go higher for a little bit. It may not have to come and take all this out, right? It may defer the deferred liquidity, right? It may just keep sliding depending on how aggressively they want to get down there. But clearly it's racing to this fair value gap that we outlined. Clearly what we've talked about has now sustained the idea that we should be able to see a good idea going lower. Right? So I hope you guys can see that. And then if we take this high to that low, right? Let me remove some of that. Okay, clean some of this up real quick. So if we take this high up here down to that low, we get our projections. Okay, if we go to the 1 hour, let's see what's happening. Yeah, we got our projection, our full 4 standard deviation projection. This is a very quick sell-off, so it's not even giving us the retracement at the 2.5 standard deviation. So we are in a hurry for whatever reason to get down to this. At least that's what it seems. Okay, and we're not going to fight that, right? And again, we've been able to map out a larger range market maker sell model. Got our high resistance liquidity in here. You can see how it kind of started treating it as such. Right, it's not random that once they hit this level here that was previously accumulation that ended up being bullish, it's not random that they tapped into that level and now it starts to slow down after it's been so fast. Right, I don't think it's random either that the 4 standard deviation in here, which is a full price swing, is also perfectly in alignment damn near with the midpoint of the 16-hour fair value gap. Right, I don't think that's random. It's too organized. Okay, and then again, we have all these things happening. So, you know, we got to see how all this stuff's going to affect stuff. I'll keep you all updated. You know, I'm heavily tuned into crypto, been for the last 8 years. And they're coming for the stock market, right? They're coming to do things with the stock market. So June 28th, mark that on your calendar, 5 days from now. Right? There's these guys named Good Evening Crypto or Coach JV. He's the only person I listen to when it comes to crypto, aside from 2 other educators I listen to for long-term investing, right? And just understanding how to break down companies and all those different things. But everything they've talked about has worked out. right, for years on end. And it's incredible to see this stuff manifest. And now it's coming for the stock market. So people that don't care about crypto, that's great. Well, you're going to have to care about it because now their technology is going to be used in stocks. So whether you like it or not, it's happening, right? Just like with the internet. Some people didn't like it. They pushed back against it. But guess what? We're now all using the internet. Okay. So I think that's what's going to happen. I don't think it's going to happen. I know it's going to happen. Just because of what I've seen taking place, not only across the world, but now finally here in America, because the administration is nice to crypto. So it's happening. So should keep your eyes on that. But yeah, so hopefully you guys understand my opinion at this point. What we can do is take. So we did close inside that range with this. I think that's manipulation though. So measure this out. So that's the whole accumulation range. So is there like one candle that I can outline? Yeah, right there. There it is. So this one candle, if it gets below that, right, we want to see that one last candle prior to price breaking out of this accumulation. That low right there, when price breaks below it, we're going to have to utilize that as a sensitive level of accumulation turn distribution, or at least that's the characteristics we would want to see. You see how this is very significant, so I hope you're paying attention. This displacement with this fair value gap here, that you notice where it's at in relation to this low. So because price displaced and closed below that low with displacement, first of all, it's a heavy sign that we're going to keep going lower. But that little piece of price delivery from that low here to the high of this candle, that is going to be the most sensitive level in this fair value gap, in this area. So if we do come back a little bit, give us that deferred liquidity logic from this bullish PD array, that is what I would expect the price is going to stay within, right? Can it color outside the lines? Sure. But on a closing basis, this is the brick wall. I don't want to see that traded to, because not only is this a balanced price range, but we also have displacement with the fair value gap being created below a low here. So when you break a low like this with displacement, you want to keep this in mind, because then you'll be able to understand, like, okay, I don't expect it to come up here, which is my thought process right now. I don't expect it to come up into this level. You know, we could do a projection as well with this larger part of the range, get that larger projection, and we could see the prices lined up with this here. Okay, I think we'll just keep that low right there. It's within that. So yeah, I hope that makes sense. Okay, because that little signature right there is very significant. This is fractal. It's not just on the 4-hour chart, right? Or just a higher time frame. When this happens, when you're breaking a low, you got to consider that. That is a strong signature that it's bearish, aggressively bearish as well. But again, this is now tagged this high resistance level. Right, we got the midpoint right there. Again, this is a bullish PD array. If we're bearish, whenever you hit a bullish PD array, that could set you up with counter trend ideas or a counter trend framework, right? So you could trade off of this, because now this looks like highs. So liquidity taken to liquidity, right? If it was bullish, it should have continued to go liquidity to inefficiency, liquidity to inefficiency, or external to internal, external to internal. Because we've now went from external liquidity to liquidity, and this as well, aggressively, that tells us that price is not interested, at least for the moment, to want to go higher. Okay? This stuff is hopefully not going to go over you guys' head, right? Some of these things I've talked about this morning, but these things are absolutely ridiculously powerful. Okay? And if you feel it has one over your head, just let me know, and I can help you in a little bit more greater detail relative to whatever it is that may not make sense. Just DM me after the call. I think sometimes we're going to get that failure swing at 500. 500. 500. You're talking about right here, right? Yeah. Yeah, we've talked about it. We pointed it out as a possibility. Now it's a high probability, right? That it's going to try to get down into that. Given all the stuff that I've described to you, I basically painted the narrative for you ahead of the open, right? You know, try to get you guys to engage, ask questions, give me answers. But I've literally walked you through why I believe this is going to go lower, and I've given you the evidence as far as, you know, what I believe is going to support that, right? So again, I hope that stuff makes sense. Everything comes together, right? It's not just one thing or another. It's all these things together, from market maker models to the failure to give us power 3 manipulation. So the daily profile potentially looking like a delayed protraction. We're talking about potential deferred liquidity going into this high resistance level, right? So that could give us a retracement or another kind of accumulation turned distribution, right? So we're in accumulation over here, so it should be able to distribute through that. If it gets below that, that's even more high probability. You could literally wait, right? If you don't like to trade high resistance, it may present you with high resistance in this bullish PD array, because that's just a typical characteristic. If you're bearish and you trade into a bullish order block or a bullish fair value gap or a bullish, any bullish PD array when you're bearish, that could set you up with high resistance because it's an opposing PD array, right? So yeah. And then of course we got the breaker. I mean, we got so much stuff that we've talked about. So all of this stuff has built the narrative, and I hope that it's clear. Hopefully you guys have clarity as far as why that's the decision we've now decided to go with. This bearishness. We have fast-paced London. So the expectation when we have fast-paced London is that we may see price pull against that run because they're making money selling off, right? And it moved too quickly. So when we start in New York, there's a manipulation phase within that first 30 minutes. So we may manipulate by pulling this up, getting everyone to think that, okay, this is strong support. And then we may see it slam lower come, 10 a.m. Eastern, right? So that's what I would like to see. I would like to see us do that. If it doesn't allow for it and then we break down below this, I would like to see price run up into that and then respect that lower half of this high to that low, right, of that order block. Preferably we stay in that lower 25% though if it takes that low, because that tells us that we are heavily bearish. And that's what we want to see. Those are the types of signatures we want to see. Okay, damn, my stomach is growling. Kind of hungry. Okay, all right. So yeah, these are the levels that we have in the perspective we have. If you look at the 1 hour, we have had our extra reversal. Accumulation, manipulation, currently in the manipulation. Let's see what's going on. That 1 hour. Okay, yeah, we got accumulation in here. Oh, you're talking about the bigger range, basically the weekly power 3, right? You could see from it's funny you mentioned the 1 hour. The 1 hour is how you want to go ahead and look at the weekly power 3. That's the time frame you want to use, because it's just very clear, right? Like you pointed out, we have accumulation, manipulation, and then distribution, right? Now you can also consider this on the smaller perspective, given the fast London and what we're trying to anticipate. for this to be deferred liquidity down here, right? Inside this range. We have accumulation. I would like to see manipulation above that, get us into this low, and then present us with a power 3 distribution going into New York session. So on a smaller scale, you also see not only the larger sell model, or sell model and power 3, right? Because that's what this is. It's a sell model, but it's also power 3, right? Accumulation, manipulation, distribution, right? Rebalance. This is the 2022 model right here, right? Run above the stops just by a little bit. Displacement, shift in market structure, fair value gap, delivery. Okay, we got accumulation as well, right? Like we have the big one, but we have accumulation, manipulation into the fair value gap, distribution, rebalance, redistribution. So I'm looking to see, right? Well, in this chart, you could see 3 power 3s happening. 2 from a smaller scale and 1 for the larger portion of the weekly range, right? Accumulation, manipulation, distribution. So that's part of the narrative. And then you also have this in here for potential bias as well, right? So accumulation, manipulation, distribution. It's happening all over the place, right? If you go look at some of the pieces of price delivery, it happened here: accumulation, manipulation, distribution, right? We have accumulation, manipulation, distribution, rebalance, and we got redelivery. So this was also part of the power 3 going higher here. Well, this actually broke the high, so this will be the rebalance to redelivery. Okay, so accumulation, manipulation, distribution, rebalance, because it broke the high and came back, and then redistribution. And then accumulation, manipulation, distribution, rebalance, redistribution. Right, we have a smaller one in here too, like I said. And then I'm going to look at this as well as something similar along those lines, alongside the deferred liquidity logic that I've taught you guys. So all of these things, again, it comes together. It's not just one thing or another. This is ICT concepts, right? It's a basket of information that allows you to be precise, because there's some stuff that may be simpler, right? Some stuff that may be quote unquote less complicated, less demanding, but in terms of the precision that you're afforded, yeah, there's nothing like it. And if you want that precision, you know, you better suck it up, buttercup. Okay, and do some deep study, right? And keep showing up, keep asking questions, and just make it happen. No excuses, right? I've had every excuse in the world to quit, to think it's too complicated, to damn near throw a indicator on my chart and just go with that, right? Just to make it easier, which it's not easier, because you lose a whole lot with those other concepts. With this right here, you make sense of the why, the where, the how, right? Like what's going to happen as well, right? You answer all the different questions, but to get to that point, obviously it takes some time. You know, this is chess, not checkers, right? Indicators are playing checkers, right? With us, we're playing chess, right? We're out here looking where the players are at, looking at liquidity and efficiencies, and we're looking to pick the sharpest possible move possible, right? And we do it pretty regularly, right? So, and I'm not some mental giant, right? I didn't even finish high school, okay? Not because I was, you know, I wasn't able to. I was homeless at the time. So, but regardless, I didn't finish high school. So, you know, I'm a normal individual. I'm not some rocket scientist. I just am someone that refused to take no as an answer or failure as an answer, and studied my ass off for now going on 7 years in August. So, you know, it took me that long. Well, it took me 3 years to be really profitable. 2.5. Once I was about to hit 3rd year, I started catching my stride, because I just understood all these things that I talked to you guys about, because I just studied and failed and lost thousands of dollars. But if I could go back, I wouldn't change anything. I'd keep those painful punishment moments, and just the stubborn, I don't want to listen moments, because it showed me that I need to respect the market. I have to respect the concepts, use them as they're taught, right? Don't make up my own shit in my head, right? Until, right, I have more experience and am able to use it just as it's taught. Because you could bend the rules outside of, you know, being a very new trader, right? When you get experience and you're able to be effective with the exact ways that it's taught, like all these different concepts, and then you start to learn where everything fits, it becomes easier to personalize a little bit more. But being able to personalize is a perk of mastery, right? When you master the fundamentals, the way that it works, right? The fundamentals of the concepts, um, you're able to then identify moments in price, moments in time where you could then bend the rules. When it comes to risk management, though, that's non-negotiable. Okay. You can't bend the rules when it comes to risk because you're going to get bent over, and we don't want that to happen. So you got to be a professional money manager. You got to understand what it requires to be that. Go and study people that are, professionals. Right? There's a couple of resources that ICT has given that are a little bit more complex, a little bit more dry when it comes to risk, but it gives you an understanding of the numbers and how to make them work for you. But you could just, again, simply use the thing that I teach you, the regressive risk management, right? If you take a loss, lower your risk until you make it back. Then you can go to full risk. That makes your equity curve beautiful. And it minimizes mental drawdown. So you're knocking two things out at once. And again, your ability to submit to that comes with time. So, but you got to start now, because the longer you push that out, right, the more difficult it becomes. So, okay, now we're 3 minutes before the open. So let's actually take this and go to the 15-minute chart. We already have an idea of where we're trying to reach for. Okay. I would personally, I don't want to catch this falling knife because I know that we're trading into this accumulation. I would like to see this accumulation itself turn to manipulation, get us up above these highs. It's a failure swing. So there's SMT. If you see that light red line, it's my indicator pointing out that we had SMT. So that may be a cause for it not to want to get up there. We've kind of already had the accumulation, manipulation, distribution begin on the S&P. Because the S&P made the higher high, S&P is going to be the strength holder. So it's more so, I guess, weak when it comes to selling off versus the Nasdaq. Right? The Nasdaq is basically more interested in going lower than the Dow and the S&P. Yeah, the ES has already taken out that accumulation right there. So I don't think the ES is going to retrace. Right? We got the accumulation turn distribution market maker sell model. We have a mitigation block here, right? High, low, failure swing, breakdown. So we don't expect this to come up here, let alone break outside of this, because now we're below this. In particular, this price delivery here, or this price level, I should say, this should be extremely sensitive, right? That is the lower body of the accumulation range, the last down candle prior to the up move in this accumulation. So any return back into that should be highly sensitive to this level. But if we did want to run up a little further, it could get up into here, but I'm not expecting that. Okay, I'm not going to expect that. We have very, very small manipulation in here for all the indices. So we'll see what it really wants to do. I'm going to require it to have to come and take this out. Like I'm going to require that because I want stops to be taken, because that tells me that someone is on the other side of my trade when I look to take the short, when my model shows up after that. If not, I know that this liquidity is active. So it could drop lower, but then try to wick up into it later on. We have a huge regular trading hours gap too. Massive. So we'll see. If it does give strong displacement, we do have to consider that this could be a target, but because of all the things we've outlined, it's way less likely that it's going to want to get up there now. if we're going to keep being bearish. Because then that would bring us on this higher time frame up to this level. So yeah, we opened up at a discount. Mind you, if this can't even attempt to get up here, we are highly bearish. I just got to see it break down, create some form of buy side, and then look to try to take it out, right? And then we can try to see if a model can show up to go short. Or, right, if it, just breaks through this, again, I don't believe that if it gets below this level, right, I don't believe that see, we're already getting below that right there. I don't believe that this is going to trade through that midpoint. So the range that I have that should be sensitive is this in here. I don't believe this is going to even be targeted whatsoever. Huge regular trading hours gap. Price is a falling knife, continuously just rampaging lower. We are not going to be like everyone else chasing price, right? I mean, we do have a mitigation block here. Right? There could be an argument for that. High, low, failure swing breakdown, mitigation block continuation. If this was happening in the macro, right, I would be more inclined to try to position myself with that. But given all the stuff that we've talked about and where price is at, the fact that London's been aggressive, we've had no manipulation, this is delayed protraction. It's going to have manipulation at some point. Honestly, this is happening before the news. So what are they doing right now? They're pulling your interest in ahead of the news, right? So those people, their stops are up here. They're trying to save their stop. They think they're safe. But I believe personally that this is going to be targeted first before we look to give that the next leg going lower, getting us down below here. I'd prefer that this stays inside of this, right? But again, you notice how we haven't closed below that? So that gives it the opportunity to still look to try to give us this retracement up into here. But we just have to see, right? We have to wait and see what this is going to give to us. Shoot. So I'm going to wait. Given the whole circumstance, I'm waiting for that first 30 minutes to unfold. Remember, ICT has said that first 30 minutes of the opening range can be classified in a way that we classify Asia, just for the New York session, though. So, we could see that first 30 minutes as the accumulation manipulation phase of the Power 3 for the New York session. Mind you, don't take my word for this. Don't take ICT's word for anything either. Watch what happens today, and then go into your chart and study the last 20 days, and then tell me if there's not validity to that idea. My indicator itself that highlights accumulation, manipulation, distribution, right? Well, it's mapping out a certain element of time, right? But when you get these boxes, right, and you look from the last couple of, even just the last couple of days, right? Not so much in the PM session, but we have accumulation, manipulation, and then distribution happen. So it mapped it all out, right? And it does this repetitively all the time. Accumulation, manipulation, distribution for the New York Power 3. Right? Sometimes it's going to be sloppy, right? And it's kind of just the way it is. But even here, right? Accumulation, manipulation, price distributed. Very nasty delivery, but kind of is what it is. PM session has the same thing, right? All right. Sometimes it has, a delayed manipulation like it had here. Okay. Not so much overnight, right? We had the open price, accumulation, manipulation, distribution overall. But for the New York session, Power 3, you see that it was kind of a delayed situation. But, right, you could see accumulation, manipulation, distribution. Okay. A little bit more dragged out, right? It started a little bit earlier, but nonetheless, accumulation, manipulation, distribution. And then we get rebalance, right? And it just continued to deliver. And you zoom in a little bit and you could see accumulation, manipulation, distribution, rebalance, redistribution. Accumulation, manipulation, distribution, rebalance, redistribution. Okay, and then of course accumulation, manipulation, distribution. Okay, so it's happening all over. All over. You just have to know that you can go in there looking for this. Okay, I'm gonna take that off and go get us back to where we're at. So yeah, when I discovered what I just showed to you guys, like 3.5 years ago about Power 3, because that was like the first framework that I operated within before I learned about market maker models as well. But once I discovered the fractal nature of those two things, market maker models and Power 3, I mean, it's incredible, honestly, right? If this here, this is accumulation. If we can't get this to run up and target these highs here, which is what I would prefer to see, right? And it just does, you know, this accumulation, manipulation, and we break this low, then again, whenever it rebalances or retrades into that, that would be highly effective to then try to target the lows that we've had outlined, which is also the low of that previous accumulation. But again, this is it's in a high resistance level, right? That's the bullish order block on this higher time frame. So it could, again, have a high that's set, fail to go lower aggressively right away, come up and take these out, which is what I'd prefer to see, then offer the sell-off. But again, if it doesn't offer that, we're not going to demand it, right? We'll just go off of what happens here, right? We have accumulation, manipulation, SMT at the highs, higher dollar, distribution, right? So in this case, I'd be watching this candle in here. So if it gets below that, right, we could see if we can get a rebalance and then a redelivery down to there. And I think from a level down to, yeah, that's plenty of range that we could work with if it offers it, right? I also want to see us get closer to a macro. Because again, there is a risk of us doing what I mentioned, right? Treating this as deferred liquidity and then bouncing us up to here. If this high is taken out, we have a low, high failure swing. Inside deferred liquidity with failure swing, buy side liquidity up here on a day that we haven't had any manipulation yet. We're in that first 30 minutes, which generally can offer that, right? So we may see this mitigation block turn us into attacking the buy side before it looks to offer the short, right? If it offers it, okay? So yeah, does all that stuff make sense that I've talked about? I hope it makes sense. A lot of you guys that have been with me for a while, you know, it probably makes sense. These are, you know, we talk about these things a lot, but those of you that are new, don't be discouraged if it doesn't make sense. Okay, Sean said, yeah, okay, good. Oh, whoops, sorry about that. Freaking coughed and pushed to unmute, but it didn't work. But yeah, so I think that we're still underneath the opinion that it's going to potentially hold this and reach up into here. You could take an aggressive idea in here, but because the news is not till, well, another 5 minutes, I would not be wanting to take this. PMI can be very violent. So I want to see what PMI does, because we could, again, we're still in that first 30 minutes. So it could still give us that manipulation before it looks to try to go lower again. Again, it could be an aggressive potential buy in here to target the failure swing. Why? Because there's a mitigation block there. Low, high, lower, low, or low, high, failure swing, displacement. Okay. You also have a swing low here. So it's a run on stops, buy side delivery. That's also a bullish breaker. But the problem is, time-wise, we're in that first 30 minutes, and we're ahead of a news event that comes out in 5 minutes that could be viciously violent. And we don't have any, we haven't had our manipulation. So we want to let that first 30 minutes unfold. But again, there's, an idea that's aggressive, right? There's nothing inherently wrong with those. But, we have rules. And ahead of PMI, ahead of significant news events, especially when there's, potentially going to be a violent move after a fast-paced London, it's better to just let that first 30 minutes unfold, right? We have a pretty clear idea of what the narrative is. We prefer to see it go short. So if we take buys in a moment where we think it's going to go short, you're counter trend trading. You have to have a high level of skill set and experience to do that reliably. Otherwise, right, if you just counter trend trade, that counter trend idea that you've assumed, it's not going to be so much of a counter trend move, as you see price move. You're going to forget about the higher time frame narrative. So you have to practice burning it in your head that I'm sticking to the higher time frame narrative, which in this case is bearish. Okay. And because there's a news event in 3 minutes right now, it's going to keep me away from this aggressive move, because it could easily open up the news. Yes, that news could then send us up to here, but again, it could turn around aggressively. So we're going to keep that in mind. Again, this is a bullish breaker. It's also a mitigation block. The breaker when you're comparing these lows, mitigation block when you're comparing these lows. Right, we got accumulation in here, possible manipulation below into the high resistance level we talked about. And then it's potentially distributing. We got rebalance, right? So it's accumulation, manipulation, distribution, rebalance. Well, I guess you could look at this as the rebalance, right? And we're looking for redelivery, right? If we're bullish, right? When we shift above this here, right? That may be even stronger argument, because now we got mitigation block confirmed, which it's confirmed now because we got back outside of it. So I think that it's a pretty solid perspective that we're going to target up here, but that may not be the big part of the move. I want to catch the big move, and I need liquidity to be engaged, a reasonable liquidity to be engaged if that's what's going to happen. We do have a bearish order block here. So the low right there, right, that's part of the bearish order block. Actually, I'm gonna take that wick. I like that wick right there. So yeah, keep tabs on this wick right here. But yeah, we could see it's spending time inside this mitigation block, right? We have price cornered at this moment, right? If it's going to go higher, it needs to go higher here. And all I'm looking for is it to take this out. The larger theme is I want to see this go up, take these highs, and then give us a sell model to continue the sell-off, because again, that pushes us up into this higher time frame level right here. Right, 920, 925. That would be a significant higher time frame level that's already been used. You see that? And then it resulted in the sell-off. I'd like to see us attempt that one more time to take these people out, let them position on the wrong side, right? Let them fund our sell side delivery, right? The execution that we may take to the sell side. And then, just continue to hold it down below this low. And then once it gets below that, I mean, you could even hold it for longer because that's accumulation, right? So we want to see a turn distribution if it's going to be bearish, and dollar needs to continue to go higher. So for now, though, dollar's pulling back. So that kind of supports the idea of this counter trend move, looking to target the highs up here. Again, the thing that's kept me away is the news event. So let's see what it wants to do here. All right, we got accumulation. If it runs higher, this will have been the manipulation, and then distribution up to these highs. It's also a market maker buy model. You can see the fractal nature and price on display here. If it can't get up through this and present this as a buy model, and it breaks down, right, below this low, then again, we're set to continue to look for the sell side, and this was the light manipulation that took place as a result of the news. So yeah, we're inside the macro now, or part of the macro. I like, as I classify it, I classify the 5 minutes before, 5 minutes after, so 15-minute intervals instead of 10. That's just, you know, my flavor. I've seen positive results off of it, and you know, I'm used to looking at it that way. You know, you could look at it the same way, but you know, ICT teaches that it's the last 10 minutes, first 10 minutes. So I'm not going to say like, oh, you know, I created this or whatever everyone else tries to do. It's just what I've studied and what I've decided to adjust, because I have the experience to allow for adjustment to what's taught without taking away from the main core of the concept. But you can test out both and see, you know, which one is better for you. But I classify 6:45 a.m. Pacific Standard Time as part of the macro, the beginning part. We are accumulating pretty aggressively in this level, which is again the mitigation block. We have a high, low. If it creates a higher high, we may now have a little breaker in there that again starts to deliver us up to the highs up here. This blue box, that's a previous new week opening gap. So preferably, if it's going to continue to be bearish, that is another level, right? That lower level that should be able to hold or start to hold price going lower. But again, right, we do have the likelihood of us trying to get up into here. I said this is an aggressive entry because the news was ahead of us. But now that the news has come out, it looks like it's supporting that idea. So it makes it a little bit more attractive to see this get targeted. We have a fair value gap here. So if we get any type of return into that, that'd be another part of the potential idea going up into these highs. So liquidity right there. So let's see if we can't get it up here, right? We have market maker buy model. Had kind of a sloppy piece of delivery in there. But now it's starting to open up and be pretty nice. Dollar's declining. Again, I was not willing to be aggressive, right? Doesn't mean you couldn't have taken this trade. I talked about how this is going to be supported unless it takes out certain levels. So it's working out. Just something I was not willing to engage. But beautiful. Yes, took those eyes. Do you have first presented on? It should be on. Oh, I guess not. Good catch. Yeah, there's the small first presented for value gap in there. So that was another supportive idea that held up in that area. You see the closure right there? Again, this is yet another example of when there's a fast-paced London. Watch this level here. Watch the response. It's another example of when there's a fast-paced London session of price wanting to come and attack those traders that were engaged overnight. So yeah, now this is in the macro, so we should really accelerate. Nice to follow the higher time frame narrative. I agree. So yeah, let's see what happens. See what happens. Damn, look at the Dow. Sheesh. Yeah, they're really trying to punish them. Again, we're back in line with the assumption of this being deferred liquidity, right? It's showing you the mechanics in the moment of the concept that I've taught you guys. How when price trades into high resistance levels or opposing PD arrays, how it can set you up with a counter trend idea or an idea based on the logic of deferred liquidity, which is only used when we're trading into high resistance, right? So it's a tactic to navigate high resistance delivery. But that deferred liquidity, right? Once it delivers up, if it's going to keep going up, or if it's going to keep going lower, right? Once it delivers up above these levels in here that I talked about, we've now engaged liquidity. So the drop lower, you can expect, if this is going to unfold as deferred liquidity, it's going to absolutely rip people's face off to the downside. Because what comes after deferred liquidity, if you're correct on the narrative, right? Like in this case, if it's going to be bearish overall, if we're correct on that, once it tags these highs up here, we may see a vicious sell-off, because deferred liquidity, what comes after, are some of the greatest, smoothest, easiest to trade market maker models you'll ever see in the chart. And you can put that to the test. just the last 5 or 6 deferred liquidity examples I've given you has proven that itself. Right from the day that I taught you about that concept. On that same day, it did the deferred liquidity, and it was a rapid move, right? Very easy to trade. You could see we're already kind of creating the stair-stepping effect. So far, though, for this hour, from 6 a.m., we have accumulation, manipulation, distribution, rebalance, redelivery, right? Rebalance, redelivery. I told you guys to watch this, didn't I? I said watch that level. So the mitigation block and this. If you didn't trust this, we talked about how this is likely at this point to try to reach up into this level. So you had 2 opportunities that I put you right in front of, minus me telling you get into a trade, because I can't tell you that. I'm not a financial advisor, right? But overall, it's done what we anticipated it would do. Deferred liquidity, we expected that. Fast-paced London, expect price to pull against it, right? All of these things we talked about. And you see the chart, and it's in the chart, right? Either I'm the most lucky person on the internet, or there's something to this, and we know what we're talking about, right? So yeah, it's super fun to see this stuff unfold like this. Never gets old. Yeah, the Dow, Maddie, that's the reason it's so dynamic is because there's only 30 stocks in the index. A lot of the stocks that are in the Dow are in the Nasdaq as well. But the reason it's so much more volatile and sometimes a wild card is because, one company, if something happens to one of the companies, that's a much larger percentage in terms of impact than it is if that same company is in the Nasdaq and it also had the same news. So to have like a little bit less of an effect, it will have a way less effect than the S&P, because S&P has 500. Yeah, I'm excited for us to get into options aggressively. Very excited. Been studying that a lot lately. I came up with my plan, and I sent the overall process and plan to you guys. Those of you that are in my private group, it's in the stock analysis / valuation section, because we long-term invest as well, right? Like retirement accounts and whatever. So I share my process with that as well for those of you that do long-term trade who want to get involved with that as well. We're also going to now incorporate options, which I've already come up with a plan on, and I'm back testing currently. What the hell? Okay, that's not right. Let's see what's happening there. So yeah, I'm watching this. Okay, we took the stops. I'm curious to see, are we now going to give us that sell-off, give us that deferred liquidity sweep, and then now start to sell off? If we break past midpoint, I'll look at this level here. I'll look at this level in particular. Honestly, I'll just look at this inversion fair value gap. If I can get a closure below this, that'll be something I'm going to observe. Nasty delivery. Look at the Dow left equal lows. There was SMT at those lows. That's triggered this run. We'll see what it wants to do. Especially if dollar rallies higher, I think that, again, all of this was manipulation. And if not, and price just keeps ripping to the buy side, then so be it. But again, we have our levels that we don't want to see price trade through, right? The low, high, lower, low. That's the breaker. If it's going to be effective, it should not go much further than the midpoint. It can go up to this point to really, really ram it up into this liquidity. And so we'll see. But again, these two buy positions that we talked about, hopefully they made sense to you. And then who knows, right? Maybe down the line, when you get more comfortable with the way that we do things, if you get more trustworthy with yourself, maybe you'll be able to add counter trend trading to your arsenal. So then you have even more setups, right? Aside from like your main framework and trading with the trend. Dun, dun. How the hell do I do that? Okay. 22. So yeah, I'm going to wait and see how we're going to deliver going into the silver bullet. I want to see how we treat that liquidity. Dollar's still going higher. Again, we have had the currencies take out the lows. So again, if markets are symmetrical and it's going to be a trustworthy move lower, then we should see the Nasdaq and the indices fall in line with this. And if we're sincerely going to reach for this area up here, right, it should be able to apply downside interest once we've now engaged these liquidity pools up here. Again, the 1 minute looks really, really convincing, right? 5 minute looks a little bit less convincing. It looks like it's just a stop run. We have had 3 drives. It's a 1, 2, 3 drives with SMT. So that did kind of support this one to go up into these highs up here. But the simple fact that we've had that very fast-paced sell-off in London, you know, you want to be on the lookout for something like this. So that deferred liquidity is absolutely in effect right now. We got this fair value gap here. I actually want to see how we treat that. So yeah, with this huge displacement, I mean, it could very easily just use this lower level. So that's what my anticipation is going to be. I want to see if we can get that turnaround, but we'll see what it wants to do in here. See how much of that range to take the high to the low. So relative to this high and that low from the start of London, we got midpoint here. It's also a bearish order block. It's a fair value gap in there too. We got we got relative equal highs right there. So let me actually take this. Okay, so again, we have a sell model. We're just simply retracing. Right, so you can also see this as accumulation. It went up very slightly. Let me see what it showed that it took that earlier. 975.50. 975. Oh wait. 975. Oh, okay, so that's a mitigation block. I thought it was the same. 975.50, 967. Yeah. So it came just short as a correction from what we talked about earlier. Doesn't change anything. It just shows that this is weaker because it couldn't take the high. Kind of went a little bit deeper then as well than the others. So yeah, I'm still watching this, trying to see if we can't get something to aggressively reprice against that. So we'll see what happens here. Again, it could, given how fast the last couple of days have been bearish, you know, today could be one of those days that kind of runs up, right? And if it does do that, that's fine. I'd rather wait and not try to catch the falling knife or try to just assume, well, it is the end of the month as well. So again, we got to be more cautious around those times. But, you know, I wouldn't be too surprised if it does pull against it. It'll just be a time where we wait. Because I was not willing to be aggressive in this buy. Obviously, rules can sometimes hurt, right? I'd be lying if I wasn't saying I'm a little salty that I didn't engage this one in the macro. We called it, right? But that's just the way it is, right? You're going to miss moves, and that's totally fine. I know that I'm following my rules. So I'm missing a move while I follow my rules. That's totally fine. You know, I already said that I was not going to be aggressive this morning. So it's the way it is. Again, doesn't mean you couldn't have taken the trade. Right? Or if you believed in what we talked about and you made the decision on your own that this is something that fits your model, not just because I said something, then it's acceptable. But if you took it, any of these ideas, just because I said, oh, I think it's going to go here, you're doing it wrong. You're trying to turn me into a signal provider and you're not learning shit, okay? Because you're too worried about taking a trade. And so when you go and do it on your own, you're going to be upset because you're not going to be able to do it on your own because you're so focused on where is he calling a trade rather than what is he talking about that leads him to believe it's going to do this or do that. Okay, so it's the way it is. Because if you're worried about an entry, where to take a trade, while I'm teaching you how to do something, or if ICT is teaching you to do something, or anyone else, if you're concerned about where to take a trade, that's the only thing you're going to focus on, especially if you engage the trade. Because now the only thing you can think about is, oh my gosh, is my stop going to be taken or not? Not any of the things that are being taught. because that is a strong enough emotional pull when you're in a trade to make nothing else matter, because money's on the line, especially if it's real, even if it's demo, right? So of course we're all human beings and we've all done it, where someone's teaching us, right, that shows that they know what's going on, but because they know what's going on, we think that it's going to be quick money, and we totally disregard the real goals that we have. If the goal is to actually learn this and do this on our own, it gets disregarded, and then people wonder why it takes them forever to learn. Okay. So again, it is what it is. We all do it, but just know these are the facts. Okay. What we do here works every single day. So you shouldn't even be worried about missing a move. I'm not worried about it. I missed 2 moves that we called out this morning. This one here and this one here. I literally talked about them right in the moment. I told you that they were more aggressive, right? And it was before the news. So I decided I'm not going to do it. But again, if you're taking trades and you haven't learned and you're here to learn, you're doing it wrong. Okay? Because you're not listening. Right? If you take a trade, you're not listening. Okay? Unless you know the process and have been here for a while, then it becomes a little bit more acceptable because you've already been here before. You already kind of know what we're going to talk about before we talk about it. But if you're brand new, still learning, and you're chomping at the bit to take a trade, you're doing it wrong. And you're not learning shit. You're wasting your time, essentially. Because then when you go do it by yourself, you're not going to remember anything I talked about that led me to believe this was, in this case, going to go up, right? To target this. Right? You're just going to think, oh, the entry was there, whether it worked out or not. It's even worse if it works out, right? Because then it's like, okay, this is acceptable. I'm going to do this every time. He's generally correct, right? So let's just do it every time. I'll pass funded accounts, be able to quit my job because of what he calls out. And then there's days that I'm not live here on YouTube, and then you fall on your face, right? And then add scar tissue, and then you got to work through that, and then you got to get out of drawdown, and it's just not worth it. It's really not. I wish I would have accepted this early on. It took me until I met my second mentor that trades ICT for me to really internalize this and to hit damn near rock bottom, to realize like, okay, I need to learn. Okay. Being so concerned about money is my problem. So I need to stop doing that and focus on how their decisions are being made. And then I did that for 6 months, and then, things started to change. And then fast forward today, it's like taking candy from a baby. I do this every single day. And I have students that are just absolutely understanding this stuff too. So there's no lack of trade setups or opportunity. Right? It's always going to have something. So yeah, this run higher, like I said, this was a buy model. So that is a framework that could have been used to also, internalize these moves. Excuse me. So we had accumulation, manipulation, distribution, rebalance, redelivery. We have market maker buy model. We targeted these liquidity pools up here. It's a failure swing, so that's low resistance liquidity. You could see that that's what low resistance liquidity looks like when it runs into it. It's fast, not many retracements. It's in a hurry to get to where it's trying to go. Yes, we opened up at a discount as well. We did mention this regular trading hours gap. I would have, again, preferred that it did not try to get up there. But, what you prefer sometimes and what actually happens can sometimes be in conflict. So you got to just go with what is actually happening and not be too demanding and be flexible. So because it's ran up like this so aggressively, again, we have this gap in here. I still don't want to see us get outside of this wick. Preferably if it does go like a little bit deeper, well, it is obviously going to go up. taking out this hopefully can be the stopping point. If not, and we start getting way up here, I'm neutral. I will be neutral overall, right? Because again, this displacement, right? There's a lot building the narrative to go lower, especially with dollar going higher, the breakdown in here. I mean, just a simple fact that there's lots of stuff happening with many companies, right? A lot of the tech companies had a sell-off, right? So that's another thing that had somewhat of an impact because they're all part of the Nasdaq. It's a tech indice. So, you know, that stuff kind of supports my objective to try to see us go lower. I'm still not away from it. This does not pull me away from my interest to go lower. If someone's just on this 1 minute chart, they're probably thinking, oh, well, this is huge. It's like so many points. It went so high. But then you go over here to the 4-hour chart and you see, oh, well, it's just a retracement into the breaker or the mitigation block. Why is it a mitigation block? Because this high failed to get taken by this one. We thought it did get taken earlier. I read the little numbers wrong. But regardless, whether it's a breaker or a mitigation block, the same reference points are in place and they should hold. So the two blue boxes in here are new week opening gaps. So I would like to see this one hold. If we can't even break the midpoint of that, that's a good sign. We have buy side taken. Let's go double check the highs up here. So there's no SMT in there. We do have a bullish breaker in there for the Dow. I guess it has like a little stronger argument that the Dow could continue up here. If we invert this fair value gap, that is a very strong indication that shorts have been fake, right? If it closes outside of that, we should expect that it's going to return into it, hold it, and then go higher, targeting these highs. This decline in here also had SMT. Let me see. Yeah, we could see SMT here with these highs as well. We have SMT at the lows. No, they all pretty much took out the sell side. See, everything is moving together, which is pretty wild. It tells you the kind of condition we're in. That's a beautiful run, obviously, in the S&P. It's to be expected. I didn't think they were going to be that quick. I didn't think they were going to be that fast. But nonetheless, the initial objective being that we reach up into this level, that was fruitful. But I wanted to wait and see before I made a decision how I was going to treat this once we arrived at that point. So that was my game plan, my perspective. That's also another thing is I didn't want to trade the pre-market open or that first 30 minutes. So we let that first 30 minutes unfold. We've now gotten to 7 o'clock and we're already up in the level up here. So because we decided to do that, right, we just ended up simply missing this move, and that's totally fine. Because now, because it's not reacting aggressively short, we're not going to force things. I do like these equal highs here, right? They're very obvious. If we move down or over a little bit, get the 15-minute chart. Let me know in the chat if you guys are getting value today. We talked about a lot of stuff, as we always do. And if you guys do like the content, you get value, if you could do me a favor and like the video, it helps with the algorithm pushing this channel out so we can help more people, right? Get them more clarity and teach them the realities of trading, not a bunch of BS. So yeah, thank you in advance for doing that for me. But yeah, let me know in the chat if everything's made sense, if you guys have gotten value from today. Did I miss any questions? Okay, no. $22, where's... Is it buy a call? Okay. What is that? Let me go pull this up. Sorry, I'm looking at something real quick. I'm still waiting to see how we're going to treat this right here. So it looks like it's just unwilling to want to go lower. We have accumulation, manipulation below. It's distributing. I'm curious again to see how we treat this buy side liquidity. Again, this is very, very strong to the downside. So before I look to be exceedingly bullish again, like we were, you know, with this going higher, I need to start to see things get inverted. First and foremost, this needs to get traded through, and then preferably we close above this down candle's midpoint. Also the wick right there, and we get above this new week opening gap. So before that, right, happens on this 4-hour chart, right, these upper time frames, I'm still skeptical about what it's going to do in here, right? In terms of, you know, price going higher, I'm still pretty skeptical. I'm looking at these liquidity pools as counterparty to the larger scheme of sell side delivery. Shit, I don't want 100. What the hell? What can I? Oh my God, really? $286. So yeah, we'll see what happens with this. It's still holding up, slowly gravitating up to the highs up here. So I got my attention right here. So yeah, everything that we've talked about in terms of these highs getting taken and just the whole structural ideas of what we believe price was going to do, everything has unfolded except what I wanted to see it do when it took these highs. I wanted to see it take those highs and then aggressively look to potentially drop and then set us up with a sell model, given the strong buy side in the dollar, the sell side in the indices being pretty attractive looking, the breaker, right, the mitigation block here, the market maker sell model after the buy model completed. Well, the buy model pretty much failed to take out the max upper level, right? So when it declined and broke this low, created a breaker, also created a market maker sell model, and then we took this low out. So the sell model has unfolded. And so now this should act as a balanced price range. So if it's super bearish, it's going to have to prove it on this 4-hour chart by staying in that lower 25%, right? And ironically, that lower 25% is aligned perfectly with that midpoint of the regular trading hours gap. You know, preferably if it was exceedingly bearish, we'd like to see it stay in the lower part of this wick, right? We're really contesting that midpoint and that new week opening gap up here. So it's rapidly repricing up into that. So once it inverts this fair value gap, we then have to wait to see if it can trade down into it, respect that on these higher time frames, and then give us displacement, right? Preferably it takes this out, creates another order block, bullish, and then trades into it, and then, you know, closes outside of it again. Right? So if an order block is here and it takes it out, we want to see one more run, potentially deeper, and then we want to see if there could be a down close candle that forms. Okay. Something like this. And then another candle opens up and closes outside of it. Okay. And this right here would be, in the way that we view things, a order flow confirmed event, right? Double change in state of delivery. What the hell didn't it just give me that? Damn, I just tagged my options entry. I don't know why it didn't put me in. Yo, you guys want to pay attention to this company called Unusual Machines. Trump's son is on the board, and it is at a massive discount. And it's a drone company. It's a military drone company that the government's invested in. And Trump put his son on the board, right? So I highly doubt it's going to fail. Anything that they touch, for whatever reason, is absolutely insane. Like everything is 150,000%. Right, Sean said lots of value as always. I appreciate you saying that, brother. Glad you get value. So yeah, we'll see what happens in here. Again, that was a really nice move higher. I just have very particular things I was looking for this morning, and I'm okay with missing the move. It's totally fine. But that was undeniably a really nasty turnaround. Well, nasty in a good way. So yeah, we'll see what happens. Again, it is only Tuesday. We do have news Thursday and Friday as well. So if something can't manifest that I want to engage today, you know, we'll just look to do something tomorrow. But I think we'll still be able to find something. We already talked about 2 entries, 2 ideas to consider around a framework that I hope has been very clear. So you guys aren't just like, you know, feeling like you're getting blasted with a fire hose, right? Why the hell is it 226 calls? It's a strike price. Yeah, I don't know what the hell. Why didn't it pull me in? That's weird. What is the volume on that? There's like no volume. Interesting. So yeah, now let's pay attention to this. I'd like to see if we can get up above this high right here. Send a wick. If it can't, that's fine. We've already taken out this. So I would like to see if we can break down. And if we could break down, preferably get below this. First and foremost, if we get below this, we got to see how it treats it. Because this may be a smart money reversal phase at the midpoint of this fair value gap. Crap. Okay, there we go. That is 4-hour order block. Oh yeah, it's right there. It's that one. So yeah, do you guys have any questions? Let me know if you have any questions. Remember, I'm here to help you, right? I sincerely want to help you. I'm not here to build no ego or none of that. I could care less what people think about me. I'm simply here to help you. And that's it. I don't know why this thing doesn't. 25. Where is NVIDIA? Okay, let me just do this real quick. Okay, so we're starting to get that response right there. And that's that 4-hour fair value gap. I like that rejection block created there. So that's nice. We may start to see the beginning stages of the smart money reversal, market maker sell model. That's what I would like to see here. Dollar's accelerating. I mean, it's beautifully running. And look what it looks like. If it was a 5-minute chart on this time frame, right here, all right, with these candles, what would you be thinking? Would you be thinking it's going to run all the way up there, or would you be thinking, oh, well, that's displacement, shift in market structure, breaker, mitigation block, balance price range up here, possibly even an order block if we move up high enough. Also a fair value gap rebalance with now a failure swing. This was high resistance, so it created deferred liquidity, rallying up to take out London's buy side liquidity. And now we got a failure swing in there. So what is a failure swing? It's a low resistance liquidity. So in all honesty, this thing should break aggressively down towards these lows, because now it's part of a larger potential narrative. So let's see if that can manifest. Still got dollar going higher. Let's see if we can't get that to respect this fair value gap. So this is inside of the potential market maker sell model, smart money reversal, low risk sell, meaning you have to put low risk in this because you don't know if it's going to break that or not. But it is at a PD array. That's what you want to see, right? So if we rally up, creating the buy side of the curve in a sell model, we want that PD array to be present where the smart money reversal is taking place. What PD array is that? This is the 4-hour fair value gap and the mitigation block low and the 50% of the wick and the midpoint of the fair value gap. Look at that beauty. Look at that beautiful thing. If it's going to work out and get down here, it's going to be massively aggressive. Just that alone has offered you a setup. 70 points. Bro, is that not gorgeous? I mean, that alone in itself is enough to get the hell off the chart. Literally. Let's see if we can't get it to go even further. So we should see speed and distance here. And that is lovely. Let's put a buy limit. Take one off there. So yeah, now it should respect this, right? Should be able to respect that as a smart money reversal. Now we got accumulation, manipulation, distribution, rebalance. We should get redelivery here. And again, this should be a market maker sell model. See if we can respect that. Still got dollar. What's dollar doing? Yeah, still rapidly going higher. It's on a mean rampage. So we should see really no respect to the levels right here. Again, we're at this breaker. We should be very sensitive here. If it's not, again, it's not worth it to really even try to force it because it's going against the intermarket relationships. So things are not symmetrical. But that right there is enough, right? That right there is enough. There's already, what, 80 points almost? Yeah, in this, we have this lower level here. We should stay below the midpoint. It should stay on a closing basis inside this fair value gap, below the up movement here. It should keep below that if that's what's going to unfold. If we're going to really go lower, that's what we need to see. It's not in a macro right now, so it's something that goes against things. But we'll see. We actually have a fair value gap that was in the macro. It's generally something you want to pay attention to too. What fair value gap, you might ask? This right here. That's in a macro. See, See how it's respecting that? So yeah, this trade's already risk-free. I already took an execution in here. I'll show you guys when it's done. So yeah, all of this is telling us that what we're doing is absolutely correct. Right, at least for now. It's showing us all the characteristics of us being correct in this instance. So we got to see it start to break down if it's going to break down. Okay, and it took me out at stop and profit. So quick, what was that? Okay, let me go show you guys the business. Execution was there. Took one off at 68 points. Had my stop above that high initially. And then, of course, I had my stop. Once I took most profit off here, ran 60 plus points. I like to lock in, you know, at least 30. When it hits 30, many times I'm able to rush the stop. This does not mean, with what we see here currently, that this is going to stop moving. This idea that we took in this instance, it's now pulling against that. But if this ends up back below this low, I would have no real issue if I didn't take a trade to then get into a trade on that when it comes back into that and then goes. Everything's supporting this going lower. The market maker sell model is just kind of held up right here. We're still accumulating a little bit inside this 4-hour fair value gap. Okay. So yeah, let me pull this up for y'all. Okay. Amp live account. Entry right at that candle right there. And then took profit. When we took this low out, that was already 30 points. So that's enough. Anticipating this as a smart money reversal, which again, it very well still could be. They just could be hanging around in here a little bit. That's fine. But it already offered me what my daily goal is, which is 30 to 60 points, right? So I was able to secure most of that. Had 4 contracts on, took 2 of them off here at this low, and then 2 were pushed right above this high right there. So it came up and took that one out. Because I wanted to see this be aggressive. That's why I thought or figured or had a feeling that this high in there, right? It's high right there. Because it closed below it, right? Below that midpoint. Like I said, this is still valid when if it was to break this low. It's another idea to potentially consider. But nonetheless, closures below that was enough for me to put my stop there. But of course, it ran up a little bit, and that's fine. There's nothing wrong with it. But again, what we do, I do, right? I do this. Okay, I don't tell you guys stuff that I don't do or stuff that I wouldn't do. And this stuff just works. It really just works. So yeah. So we'll see what happens. Now we got buy side, sell side. Inversion fair value gap got closed below. So that's a confirmed inversion. So when it returns into it, it should act as an entry. So we should be able to see speed and distance if we're correct on this market maker sell model. If not, and it gets up beyond this again and trades above these highs, then, you know, we may look to try to come and take out these highs here, right, from earlier. But we got dollar going so aggressively to the buy side, I don't trust buys. Even the ones down here that I called, I didn't trust. So there's that first entry, and I took a second entry. I'll show you guys that in a moment. Let's get one more little spike. So we don't want to see this hang around here much. If it does hang around and it creates an issue, then we may not see it go as deep as we believe it should. All the assets are going lower, so we should see really no problem. I would really like to see if we could take this low out there. If we can get down there, we are for surely focused on this targeting the lows. So yeah, we got buy side, sell side. So it should not, if it's bearish, come up into here. Okay, so all of this level in here should be safe. And if it gets up into that, that'd be a problem. So we wouldn't want to stick around for that. So let's see what happens. Still got dollar moving higher. It's aggressively repricing. We're getting into the macro right now. I'm not sure exactly if they're going to want to come and take these equal highs out. I prefer that they don't. They've already taken stops, but that is a risk that's in the market right now. I mean, things look like they're somewhat cracked in correlation. They're not fully supporting, but I mean, with what price is doing here, it's still holding this idea to try to get down into these lows. So yeah, 40 points is just simply below that. Excuse me. It's very reluctant. I don't really like this hesitancy for it to go. All right, we don't want to pass this level in here. We want to see it very sensitive to this lower part of that fair value gap. Why is this fair value gap significant? Because this was in a macro, previous macro. Okay. So let's see what happens here. It's going to have to break here and get below this candle. If we can't get below that candle, that is going to be an issue. This one right here. All right. Let's see what it wants to do here. Okay, so that got stopped out. Probably should have put my stop above there, but that would have just been a little too much. Again, this doesn't take away that the idea is still potentially valid. If it trades outside of this fair value gap, then we may start having some issues. But I would be keeping my attention here. I'll just take that. I'll accept it. It was 22 points. 22 points stop. Yeah, I mean, knowing the volatility, I should have put a little bit larger stop. It's right in there, just by a tick. Just by a tick, and of course. So we break this green line. It should continue to rapidly get down there. That green line should be our order block. All of this is showing order flow is still bearish. You notice how I haven't said, oh, it went up here, so we're going to potentially go higher. There is a chance if it was to break through these levels, but it hasn't done that. We're still in the market maker sell model. Another thing that you can consider, if you weren't considering this one, this lines up with time and price. So probably should have waited for that secondary idea, or just simply put it up above here. But that's a mistake on my part. That's fine. The lower portion of this, when it breaks down through that, that's our accumulation of the range. So that accumulation should turn to distribution. Okay. All right, so again, we broke that green line. Again, that could be another thing to consider, assuming that the sell model is going to unfold properly, which I believe it will. I think I'll just use the whole entire box in there. Sorry, let me go check the chat. Okay, guys, got any no questions? Hopefully you guys like this idea in here, because dude, this was, we waited, missed these moves in here, me personally, but was able to get in here and still walk away because I got 68 points, took a 22-point stop. That's totally fine, right? Because I'm still walking away with what, so almost 70, 68 minus 22. I'm horrible with math. What is that? It's like 40 something. It's above 30 points. So my end of the day goal is still secured, right? And am I in a hurry to try to get back in and go take another trade? No, I'm not. I could care less. I call these things every single day. Literally, market maker models are there every day. I call them every single day. So what is the reason to be upset? My bills are paid. What's the problem? There's no problem, right? Obviously, you would like to get more. In this instance, I did make a mistake. I should have put it above this fair value gap I was talking about, because then the trade would still be active, right? Dollar's still going higher. Everything is still supporting this going lower, just like I outlined, okay? Perfectly. Think about what we did today. I talked about this having a likelihood of getting up above these highs, right? We pointed out these highs too, just in case, but we went into this 4-hour fair value gap. I literally told you before any of this happened that, okay, I believe that since we're stalling here, this is a higher time frame PD array, higher time frame, it looks like a rebalance. We should be able to see this unfold and then try to target the lows now. So buy side, buy model to sell model. Smart money reversal, okay? And then I talked about the 2 areas for entry and how to get in, right? Who's doing this? Like, nobody does it like this. Nobody is this accurate, right? There's a handful of people that obviously I respect and that are good. But dude, nobody's doing this. We literally called buys. I called the buy here and buy here. Although I didn't take it, I said it was aggressive because it was. And then I waited, framed everything out, and then got you to be in the right position to then go lower. I don't want to put you in trades. I can't, right? I'm not telling you to take a trade on anything at all. I'm telling you not to take a trade, like I said earlier. But who's doing this? Nobody, okay? Nobody. Consistently every single day, every week? Yeah, nobody. I don't care what nobody says. Nice, Jen. You took an entry at 941. Sheesh, you picked the top right there, yo. Damn right. If you have more than one contract, I would probably take most off and then leave it at break even to then try to see if you can smack the lows down there. I think we could get down there. We don't want to see this range get taken out. So your break even, if you took it at 941, should be maybe even just right at that rejection block, because that's inside this range. So again, that should be a BPR. Even if it does trade up into that, it should tap it and then be aggressive. We do have this candle in here as well. This may end up being our second stage distribution area. First stage here, low risk sell. First stage distribution. Breaking down, getting below this level, returning into it. Second stage. We should really pick up when we get down below that, if we're right about it going lower. You see the blue box in here? Let me put the measurements on. So that is the midpoint of a new week opening gap. The regular trading hours gap, right? We couldn't even get to the midpoint. So that tells you that we're bearish in itself. Dollar's accelerating higher. The other indices are falling, or starting to at least. There's somewhat of a cracking correlation. So again, it's kind of a sketchy day, but it doesn't really matter. You can always figure something out. And again, nobody's doing it like us. Okay, I mean it's just a fact. You know, it's not even an ego thing. It's like just a fact. So many shitheads on the internet hurting people. And it's like nobody does it this way. Nobody knows how to be consistent like this. And we do it every day. In my private group every day. Twice a week here for you guys on YouTube. That's not to say that I'm like the best or whatever. But, you know, we're all malleable. But at the same time, nobody's able to call it like this, right? If this does fail, by the way, if this does get above this high and we come back down and respect it and create a bullish order block and then it trades through that again, we do have these equal highs up here, which, you know, again, it's a testament to when there's equal highs, even in this type of scenario, could be a bit sketch, right? So yeah, these deep retracements are not at all the way you want to see a market maker model unfold. What, like really deep retracement, stop that out. We got another really deep retracement. What is it going to stop that out too? Right? If it does that, again, it's a testament to the fast London, creating a shitstorm in London or in New York. And then we have the cracking correlation, which is somewhat of an issue. It's kind of cracked in correlation, not really. Right? We got decline in here, basically retracement. So it's kind of just stuck. Or coming back to that range in the Nasdaq. I mean, if the S&P declines from here, I mean, this is such an obvious power 3 component. We have accumulation, obvious manipulation, distribution. If it goes higher, though, it's the opposite way, right? Accumulation, manipulation, distribution, rebalance. And then once it breaks this high, excuse me. Once it breaks that high, we may end up getting a little bit deeper into this up here. I'm not going to expect that though, right? Because again, I want to see this go lower, right? But if it forces me to accept that it's going to go higher, then so be it. This right here is beautiful. If we could break down through this low, these consecutive up candles, once they're violated, create a change in state. If it returns simply to that low, it should be aggressive. And that's inside the potential second stage distribution area. Dollar is still going higher. The 4-hour confirms the short in here. Like, look at it. It's just a rebalance respecting the lower 25%. And now we're in redelivery mode. Targeting these, this liquidity here. And the 16-hour fair value gap, which was the initial objective that I talked about with you guys. Right? So yeah, this thing should really pick up. We're deep inside the macro now. So if it's going to be short, right, it should be able to offer another idea. Whoa. Somewhere in here. Shit. So yeah, we got buy side, sell side. All of this is now balanced up here. So if it's going to go short, it's going to have to do it right in there. And we should not come deeply into this again. And if it does and it breaks this high, then again, that's a problem. We may look to go higher. But I don't, given what we've seen from that 4-hour, I don't see that being the case. Yeah, I would study this. I've already done enough today, but I would study this. Now we're getting down below that. That's nice. It should see speed and distance from here. We should not do this whole nasty, slow, choppy BS. It should pick up aggressively through that low. This thing should have no games being played with this. Again, we're in that macro, so we need to see speed and distance. Again, all of this is anchored in that 4-hour retracement. It is stuck inside this wick here, so you know it's kind of slow. It's a very, very slow delivery from these levels. We see the structural ideas taking place, but it's very high resistance. This is an area that should open up in low resistance. So if it can't do that here, then again, that's just the condition we're in, and you want to get scalps. You don't want to get huge range delivery. You don't want to anticipate that because it's just not offering it. You're going to get frustrated. So yeah, if we were to measure out that to that, that's already 30 points. Okay. 1 for 1 right there. Right, just simply to that low right there. If you're being a scalper, listening to what I tell you about 20 to 30 points, you had multiple opportunities from this level to get 70 points, almost like I did. You had an idea here. Oops. Okay, so right in there, just simply off of this candle, when it returned into that and it pushed lower, that offered a reasonable 40 points. All right, I tried to hold this for a little bit longer and have my stop too short. So of course it kind of, you know, took me out at 22 points. Then we also have this retracement into this. This is actually a bearish breaker, if you didn't know. The down candle right there. Low, high, took the high, lower low, market maker sell model. Again, this is a very good area to take or to ideally think about taking a short, right? Hypothetically. Because we should see speed and distance. If this sell model is going to unfold, all the shenanigans that took place up here should be eviscerated when we go lower from this level. Because this is previous accumulation, second previous accumulation, or first accumulation, second accumulation, then smart money reversal, low risk sell at a higher time frame PD array. This is how you want to frame out market maker models. Like people think that it's just like randomly going up and randomly going lower and you just have to look at the ranges. No, you want to have an origin. Where is this origin? The deferred liquidity opposing PD array. So it tapped it. And then what do we expect? Price to come up and take out liquidity from London because London was fast. Okay. We ended up getting that. We called the mitigation block and then we called the redelivery market maker buy model as well, targeting the level up here. We then hit this 4-hour fair value gap. We tried to watch and make sure that, you know, we kept this liquidity in our mind. But it failed to get there. And what did it do? It broke down. Okay. Creating a potential idea for a smart money reversal. Assume that, took a short, and that's where you saw me take a trade. I talked about it too. Price came all the way back just to simply take out the stops. I told you that this does not scare me away from my setup because we're rooted in that higher time frame. It's just manipulating. to tag you out. And then it continued. And then I talked about the return into this. It should hold. As long as we stay below this, it should hold. Right? So there's an entry there. So low risk sell, smart money reversal, first stage distribution. And now we're trading into this as a second stage distribution. So for a market maker sell model. So if this works out, gets us below that, we should see speed and distance below that. This little area in here, just that simple return to that for a value gap. If you entered on that, you could have taken down 35 points. It offered it, right? We already talked about how it's a little bit high resistance in here. It's kind of slowly delivering. It went from fast to slowly delivering, which is typical when it comes to fast London, fast pre-market open going into AM session. A lot of times it starts out fast, but then it slows way down. PM session may be the session that ends up really pushing this through. It may look to continue to accumulate inside of this fair value gap. Maybe it comes back up there one more time. It's very, very slow. But we've turned deferred liquidity or an opposing PD array to anticipating the buy side of a market maker sell model curve in a sell side narrative that we painted in detail since Sunday. Well, kind of already printed a little bit beyond going into Sunday. It failed. So we talked about having to watch this, see if it can get up here. Then the breakdown through that confirmed the short. We also, again, going back to what I said earlier, we have displacement for a value gap mixed with the swing low. Okay. We closed below, creating the gap below the swing low. That is a confirmed shift. Like those of you that think about shifts in market structure, you need displacement through the area you're watching to be a shift in market structure. If you get displacement that closes below it, it's more high probability that that's an actual shift. There's another gem for you. You guys have stuck with me this long. And then again, this breaking through a low in general, like we talked about earlier, and it closes, that little gap in between it is what you want to expect to be traded to, not all the way up into the gap. Those two things that I just said right there probably went over many people's head. Because that, I mean, dude, those of you that have been here for a while probably know how valuable that is. You know, you are the best. I appreciate you saying that, Sean. Yo, what's up, Byron, bro? Byron, you're late, bro. What happened? We call what? 1, 2, 3, 4, 5 entries. Come on, Byron. Come on, bro. Glad you hopped on, though. Hope you're enjoying your day off. Yo, everybody, tell Byron he needs to start a YouTube channel. I got Harley to do it. Now we got to get Byron to do it. We got to get our heavy hitters going public. If you guys are okay with it. Shit, I'll watch you. I'm sure everybody on this call will watch y'all too. Byron's a freaking nature. Harley is a freaking savage too. Harley's YouTube page is Harley Trades. He's one of my students, longtime students. Not so much a student anymore, right? Because he's elevated. And I couldn't be more proud. Byron's been with me since I first started trading. so Byron is a savage. We've been with each other for a long time. Today was too clean. Learned a lot from the GOAT. I wouldn't say I'm the GOAT, okay. But we did navigate buy side and sell side, called buys and sells, very particular targets, framed out a buy model and a sell model, and power 3. And we went into all the intricate details. And we talked about deferred liquidity, all the things that I teach you. So many of them were active in the chart today, which is amazing. And again, it just shows you the repetitive nature of what it is we do here. So the more you stick around, the more you pay attention, the more you backtest, the more you ask questions, in this community, you will elevate. You know, we're not like Joe Schmo over here on YouTube, just spitting signals out to you, turning you to basically a drug addict. but just for candlesticks. You just like can't wait to get another hit, right? Like fiending. Give me an execution. Do I buy or sell? Like, I don't know. Listen a little bit and you'll figure out that on your own. So then you can go live a life that you're dreaming about, right? But that's why you guys stick around. You guys are getting progress. You guys are making progress. And luckily, I'm able to do this consistently and I can explain it and I could show you. And I do show you. So it sticks. A lot of this stuff is very sticky. Like what I just said about the shift in market structure, like also with the, breakdown or displacement, creating a fair value gap below a low, that little piece, right? These are sticky things. Like I said, also, it should be speed and distance from this level. I mean, we should spend really no time getting down below that low. A little salty I didn't hold this trade, right? I could have just like compensated a little bit with that larger target. I definitely 100% should not have pushed my stop so close here. I mean, I don't normally even do 20-point stops. I don't know why I chose to do so. Trying to be a little bit too precise. But nonetheless, right, all these moves in here, everything is still unfolding, right? The retracements are pretty deep. So you can just, by the visual of what's showing up in the chart, how price is behaving, today is a day you'd like to open up your stops a little bit more. And by doing that, you have to also kind of compensate. You have to kind of compensate with your lot size. If we get any type of wick that comes back into this level, that would be a beautiful gift, right? I mean, this right here in itself is a gift. It's just literally a low, high, lower, low. Price is breaking down. It's an order block, buy side, sell side, midpoints being respected. We've got the inversion fair value gap. Came right back into it. And it's just sliding. So if it can get a wick into this, that'd be another thing to watch. But, it may not give it to you. Yeah, we still got dollar rapidly going lower. See if we can't get one more push. Yeah, I like the fact that the others are moving. Seems pretty nice. Pretty nice. Not too shabby. Not too shabby. It's like every idea that we've given for a trade setup worked out today. It's pretty fascinating. So 1, 2, 3, 4, 5, 6 setups in a row. 6 for 6. If this goes 20 to 30 points. That's just simply getting us back down below that low. We should see speed and distance. I like that we left part of this available. That's what we want to see if we're bearish. That'll be another 30 points. Again, I'm watching these ideas. I've already taken my trades, but just some things to consider, right? The characteristics that lead me to believe what's going to happen is what's the most important. Not the idea itself, but what's leading us up into that assumption, right? That's what's vital. Because without that, there's really no idea. Let's see what happens here. Lots of deep retracements. So I'm assuming that this is going to be a fast move, but if it's not, oops, It's going to be because today is just that type of day. If it's going to open up, it's going to open up here because we're in that second stage. So so again, accumulation, manipulation, distribution, accumulation, manipulation, PD array, distribution. So power 3 is happening again there, happening here. It happens all over. See, it's having a real hard time getting through that. Not necessarily the greatest sign. The hell was that? That was freaking weird. Let's see what's going on. So yeah, let's watch and see how this treats this right here. It would have just had to simply get down below that. It's really reluctant. Very, very reluctant. See if that changes in the next couple of minutes. We got all 3 indices agreeing, which is nice. It's always a good thing. See if we can get that one little last push. It may get stuck inside here. Again, we're still inside that high resistance. It's ideally not what we want to see, of course, but hey, sometimes it's how the cookie crumbles. So yeah, that would have been a potential idea that takes a loss. But again, that's why you don't go back in 100 times. Right? We call 6 trades, but you have to pick 1 or 2 within those 6. And once you hit 2, you don't keep going, because the more exposure you have, the more likely it is that you'll come across a losing trade. Now, you can't be correct on every trade. So 1 out of 6 trades that were given ended in a loss. The other ones resulted in well above 30 points delivered. But this last final one, it's a little bit too slow. Right? With the expectation of this being second stage, it should be quick. This is not quick. So that makes it less likely that it's even going to unfold at all. Right? Doesn't mean it won't, but this makes it a little bit less likely it's going to be smooth sailing like, we're normally used to. Yeah, I guess we've done enough today. Guess we'll leave it right there. Keep our eyes on whether it gets down here or not. We'll see. But yeah, hopefully you guys got some value from today. Don't forget to like the video, subscribe to the channel if you guys got value. Appreciate you guys hanging out. And yeah, if you guys got any questions, just let me know. I'm more than happy to help you. Again, thank you guys for supporting the channel. You guys could be anywhere else, but you're here. And I hope that's because you find that, I give you value, right? And I hope you guys are using the stuff that I teach you guys too, because that's what's most important. All right. So again, thank you guys for hopping on. Don't forget to like and subscribe to the channel. Share it with your friends who know how to, or who are trying to learn how to trade, or who know how to trade. Let's try to help them get better, right? So yeah, with that being said, God bless you guys, and let me know if you need anything. I will see you guys back here on YouTube on Sunday. And those of you in my private group, we will be up bright and early tomorrow at 6 a.m. or 5 a.m. Maybe 5:30, depends on when I wake up, right? So yeah, that being said, God bless, and I'll catch you on the next one.